Good day. So on this video, I'm going to deal with the rent adjustment, and I'm going to use the Mpumalanga province prelim exam for 2020, right? So there's a rent of 360, rent income of 368,200, which is on the trial balance, and this is the pre-adjustment trial balance for the period ending 28 Feb 2020. So I'm giving that on the adjustment there is rent income, and this rent income is given as 368,200. It's 368,200. This is the rent in the pre-adjustment trial balance. So I want us to look at the adjustments now. So if you look at adjustment G, that's where they're talking about the rent. So they're saying the rent income includes rent received for March 2020. The rent income increased by 1,400 on 1 January 2020. So there are two issues there. The first issue is that we can already tell that this rent provided is actually for 13 months. Using the principle of matching and including your accounting period, we know that we should record rent for only 12 months. So problem number one that we have is that this rent of 368,200 is rent for 13 months. That's problem number one. Now the second problem is that the rent was not the same throughout the year. If the rent had been the same, this was going to be very simple, because we're going to take the 368 here and we're going to divide it by 13 in order for us to get the rent that we need to remove. But we have a challenge in that we are told that this rent increased by 1,400 effective January. So if I'm to put a timeline here, right, my year starts 1 March 2019, ends 28 Feb 2020. Now this is Feb, but then the rent is also paid for the month of March to make them 13. So from here to there, I've got 12 months, and then I've got March is the 13th month. That's number one. Problem number two, the rent was the same throughout until we got to January. So in January, the rent in January, February, and March is different from the rent in the previous months. So the rent from January is now plus 1,400. So there's an additional. So there's a plus 1.4 plus 1.4 plus 1.4. So there's a 1.4 that has been added to the rent from January onwards. So what you do is you first of all check. You have to eliminate the 1.4 by saying, assume that the rent had not increased. If the rent had not increased, it means the additional 1.4 that was paid in January, February, and March wouldn't be there. So what can you do? You can take 1,400 and multiply it by 3. So on your calculator, 1,400 multiplied by 3 will give you 4,200. So what we are actually saying is that in this rent of 368,200, there's an additional 4,200 which might not have been there if the rent not increased. So in order to work out what you're going to do, you're going to say 368,200, and then you subtract the 4,200. In other words, you are eliminating the increase so that the rent stays the same for the whole year, including the additional months that was paid. So that would have been 364,000. So we are saying, yet the rent not increased, it could have been 364,000, but it became 368,200 because there was an additional 1.4 that was paid for 3 months, that is January, February, and March. And then what do you do next? You're going to take the 364,000 and you divide it by 13 months. So you divide that by 13 months, it's going to give you 28,000. So what that means is that before the rent increased, so I can write it here, before increase. Before the increase, the rent was 28,000. After increase, it became 28,000 plus 1,400, which made it 29,400. So we are saying here from March to December, the rent was 28,000 per month. But from January to March, the rent was now 29,000 29,400. And remember, the issue is we want to remove 1 month, right, which is the month of March. So automatically it means the rent that we need to remove is 29,400. So when you're doing your income statement or statement of comprehensive income, under your other income, your rent income is going to be 368. We said it's 368,200. It's going to be 368,200 minus 29,400, right? And that would be on your calculator, 368,200 minus 29,400. That will give you 338,800, right? So this is what you do on your income statement. It's going to be rent income 368,200 minus 29,400. But when you're doing the statement of financial position or your balance sheet, you need to remember that this 28,900 is income received in advance. In other words, the customer paid you more rent than what they were supposed to pay, because they were supposed to pay rent for 12 months, but they paid rent for 13 months. So which means when you're doing your balance sheet, you're going to put it under trade and other payables. So under your trade and other payables, you're going to have income received in advance, right? If you want, you can write it as deferred income, right? And your deferred income is going to be 29,400. So what this means is that from this adjustment, number one, you were supposed to first of all eliminate the increase in the rent, which is the 1.4, which was paid for 3 months. After eliminating it, then you end up getting 28,000 as your rent before the increase. After the increase, your rent is 29,400, meaning your income statement adjustment will be like that. Okay, it will be like that. So it will be 368,200 minus 29,400 to give you 338,800. But if you were doing a balance sheet or a statement of financial position, you will have to say under your trade and other payables, you're going to have income received in advance of 29,400.